Preparing for a fund accounting and alternative investment service at State Street Interview. You've reached Candy Mentor, and this video is for you. We'll walk through 15 key questions you're likely to face. For each one, you'll see what the interviewer is testing, the core concepts you should cover, and a sample answer. Subscribe, like, and share, and drop a topic request in the comments. Question 1. What does fund accounting mean in a fund administrator like State Street? The interviewer wants to assess whether you understand the administrator's role in NAV production, independent record keeping, portfolio accounting, investor reporting, and the distinction between investment management and fund administration. While answering, focus on NAV accuracy, trade and cash processing, reconciliations, pricing, fee accruals, investor activity, controls, deadlines, and why clients rely on State Street for scalable fund administration. Fund accounting in a State Street context is about producing an accurate, timely NAV and investor records for each fund. I would track portfolio positions, prices, income, expenses, subscriptions, redemptions, and accruals, then reconcile them to custody, broker, and general ledger records. The administrator is not making investment decisions. It is independently validating the fund's books, so managers and investors can rely on reporting, fees, and performance. Question 2. Walk me through the main steps you would follow to calculate a fund's NAV. The interviewer is testing your understanding of the full NAV workflow, including trade capture, valuation, income accruals, expense booking, reconciliations, review controls, and NAV per share calculation. Make sure to cover the sequence from opening balances through trades, pricing, FX, income, expenses, investor activity, reconciliations, reasonability checks, sign-off, and final NAV dissemination. At a high level, I start with prior day holdings, process trades and cash activity, accrue income and expenses, apply corporate actions, and value each position. Then I reconcile positions and cash against custodians or brokers, investigate breaks, calculate management and performance fees, and derive NAV per share or unit. Before release, I would run reasonability checks against prior NAV, market movement, investor activity, and tolerance thresholds. Question 3. If you find a reconciliation break between the fund records and the custodian, how would you investigate it? This question evaluates your problem-solving discipline, reconciliation knowledge, attention to detail, ability to prioritize NAV impact, and comfort working with custodians, brokers, clients, and internal escalation teams. In your answer, talk about classifying the break, checking source documents, comparing trade dates and settlement dates, quantifying materiality, booking valid adjustments, documenting evidence, and escalating unresolved issues. A reconciliation break means the fund's books do not match an external source, usually custody, prime broker, or administrator records. I would first classify it as cash, position, price, trade, or corporate action related. Then I check timing, settlement date, trade capture, FX, and source documentation. If it is valid, I book the adjustment. If unresolved, I escalate with evidence and track it until NAV impact is understood and controlled. Question 4. How is accounting for alternative investment funds different from accounting for traditional mutual funds? The interviewer wants to assess your understanding of alternative fund complexity, including illiquid assets, bespoke fund turns, investor-level allocations, valuation uncertainty, and enhanced documentation requirements. Be sure to mention private assets, hedge funds, real estate, bank loans, capital calls, lockups, gates, side pockets, waterfall allocations, less frequent pricing, and stronger valuation governance. Alternative funds are less standardized than daily traded mutual funds because assets may include private equity, hedge funds, bank loans, real estate, or derivatives. Pricing is often model-based or manager-supplied. Liquidity terms are more complex, and investor allocations may involve commitments, capital calls, equalization, gates, or side pockets. So I would expect heavier documentation, exception review, valuation governance, and client communication before finalizing NAV or investor statements. Question 5. Can you explain how capital calls and distributions are handled in fund accounting? The interviewer is testing your knowledge of private equity and alternative fund mechanics, especially commitments, contributed capital, unfunded commitments, receivables, cash movement, investor capital accounts, and distribution notices. While answering, focus on investor commitments, call notices, receivable booking, cash receipt, reduction of unfunded commitment, distribution allocation, capital account updates, waterfall terms, and reconciliation to bank activity. Take a $100 million PE fund where an investor commits $10 million. If the GP calls 20%, I record a $2 million receivable from that investor and cash when received. For a distribution, I reduce investment proceeds or income according to the waterfall and update remaining commitment, contributed capital, and capital account. The key is tying notices to cash, investor allocations, fund documents, reporting, deadlines, and bank activity. Question 6. How would you calculate and review management fees and performance fees for an alternative fund? This question evaluates whether you can interpret fund documents, apply fee methodologies, identify investor-level nuances, and understand how management fees, incentive fees, and carried interest affect NAV. Make sure to cover fee bases, rates, day counts, accruals, waivers, high water marks, hurdles, catch-ups, crystallization, investor classes, and review against the LPA or offering memorandum. Management fees are usually formula-driven, such as committed capital during the investment period and invested capital afterward. I would read the LPA or offering document, apply the correct rate, day count, class, and waiver terms, then accrue it in the NAV. Performance fees or carried interest need extra care because they depend on hurdles, high watermarks, catch-ups, crystallization dates, and investor-level allocations, not just a simple percentage. Question 7. How would you approach pricing securities that are illiquid or hard to value? The interviewer wants to assess your valuation control mindset, understanding of pricing hierarchy, ability to follow approved policies, and awareness of NAV risk from stale or unsupported prices. In your answer, talk about approved pricing sources, manager marks, broker quotes, valuation committees, third-party appraisals, fair value hierarchy, stale price checks, documentation, and escalation of exceptions. Pricing is where alternative fund accounting can become judgment-heavy. For listed securities, I would use approved market feeds. For private or hard-to-value assets, I would follow the valuation policy and obtain manager marks, valuation committee approvals, broker quotes, or third-party appraisals. I would not override values casually. Instead, I would document the source, date, hierarchy, reasonableness checks, and any exceptions, because pricing directly drives NAV and fees. Question 8. How do foreign exchange rates affect NAV calculation for a multi-currency fund? The interviewer is testing your understanding of multi-currency accounting, realized and unrealized FX, translation into base currency, approved FX sources, and reconciliation of local versus base balances. Be sure to mention transaction currency, fund-based currency, FX rate sources, trade settlement, remeasurement, realized FX, unrealized FX, cash reconciliation, and explaining NAV movement from currency effects. For a multi-currency fund, I separate local security accounting from base currency reporting. Trades, income, and expenses are recorded in transaction currency, then translated using approved FX rates at valuation point. Realized FX comes from settled transactions. Unrealized FX comes from remeasurement of open balances. I would reconcile both local and base cash, check stale rates, and explain NAV movement from market price versus currency impact. Question 9. What controls would you apply around corporate actions in fund accounting? This question evaluates your knowledge of corporate action processing, entitlement calculation, date conventions, custodian notifications, voluntary elections, income recognition, and downstream NAV impact. While answering, focus on X date, record date, pay date, mandatory versus voluntary events, source verification, position eligibility, tax treatment, cash or stock reconciliation, and timely client instructions. A missed corporate action can distort positions, income, cash, and NAV, so I treat it as a high-risk input. I would verify the event terms, X date, record date, pay date, election details, and tax treatment against custodian notifications or market data. Then I book the entitlement, reconcile resulting cash or shares, and review reasonableness versus prior holdings. For voluntary events, timely client instruction capture is critical. Question 10. What key checks should be completed before releasing a NAV to the client? The interviewer wants to assess your control awareness, NAV sign-off discipline, ability to identify material errors, and understanding of review procedures used in fund administration environments. Make sure to cover completeness checks, price and FX review, cash and position reconciliations, income and expense accruals, investor activity tolerance checks, prior day movement analysis, and escalation. Before releasing NAV, I would run controls in 3 buckets: completeness, accuracy, and reasonableness. Completeness means all trades, cash, income, expenses, and investor activity are booked. Accuracy means prices, FX, fees, and allocations follow approved sources and documents. Reasonableness means NAV movement makes sense versus benchmarks, P&L, flows, and prior exceptions. If something breaches tolerance, I investigate, document, and escalate before sign-off rather than pushing a questionable file downstream. Question 11. A client challenges the NAV shortly before the deadline. How would you handle the situation? This question evaluates your client service judgment, deadline management, ability to remain composed under pressure, and skill in explaining accounting issues with evidence and materiality analysis. In your answer, talk about identifying the driver, quantifying NAV impact, reviewing source support, communicating clearly, escalating when needed, avoiding unsupported changes, and preserving both accuracy and timeliness. If a portfolio manager challenges NAV right before deadline, I would stay calm and move evidence first. I would identify the component driving the difference, such as price, trade, cash, FX, fee, or allocation. Then I would compare our source to client support, quantify NAV impact, and decide whether it is within tolerance. I would communicate status, expected resolution, and escalation path clearly, because State Street roles depend on accuracy and trust. Question 12. What journal entries are typically involved in subscriptions and redemptions? The interviewer is testing your understanding of investor activity processing, capital share movements, cash receivables or payables, dealing dates, NAV application, and cutoff controls. Be sure to mention subscription cash, investor capital or shares issued, redemption liability, payment processing, dealing date NAV, anti-dilution or swing pricing if relevant, approvals, and cutoff rules. On a subscription, I record cash received and credit investor capital or shares issued, depending on the fund structure. On a redemption, I reduce investor capital or shares and record cash payable until payment is made. I also check dealing date, NAV used, anti-dilution levy, swing pricing if applicable, and AML or investor approvals. The accounting is straightforward only after the legal terms and cutoff rules are confirmed. Question 13. How does a private equity waterfall affect fund accounting and investor allocations? The interviewer wants to assess your understanding of carried interest mechanics, investor-level capital accounts, fund document interpretation, preferred returns, catch-up provisions, and allocation accuracy. While answering, focus on contributed capital, return of capital, preferred return, GP catch-up, carried interest, European versus American waterfalls, investor classes, and the risk of misallocation. Waterfalls determine how profits are split between LPs and the GP. A typical European waterfall first returns contributed capital, then pays preferred return, then catch-up, then shares remaining profits under the carry percentage. In accounting, I would track each investor's capital, distributions, unfunded commitment, and carry allocation. The risk is misapplying fund terms, especially with multiple classes, excuse rights, tax blocks, or deal-by-deal provisions across reporting periods. Question 14. What is shadow accounting, and why do investment managers use it alongside an administrator? This question evaluates your knowledge of operating models between managers and administrators, independent NAV production, exception management, and how dual records improve control over fund reporting. Make sure to cover parallel books, comparison to administrator NAV, identifying breaks, validating prices and fees, resolving exceptions, control ownership, and the importance of documentation before release. Shadow accounting is the manager's parallel NAV process used to compare against the administrator's official books. It helps catch trade capture issues, pricing differences, fee errors, and allocation mismatches before investors see results. In an interview, I would frame it as a control, not a competition. The best outcome is clear ownership. The administrator provides independent records. The manager reviews exceptions, and both resolve material breaks before release. Question 15. Why are you interested in fund accounting and alternative investment servicing at State Street? The interviewer wants to assess motivation, cultural fit, understanding of State Street's asset servicing business, and whether you appreciate the detail, controls, deadlines, and client focus required. In your answer, talk about State Street's scale, fund administration platform, interest in NAV and alternatives, attention to detail, reconciliation mindset, client service, and willingness to learn complex products. I would position State Street as a leading asset servicing and fund administration platform where accuracy, controls, scale, and client service matter every day. For this role, I would contribute by being detail-oriented on NAV production, disciplined on reconciliations, and proactive when exceptions arise. I also like that alternative investment servicing combines technical accounting with judgment around valuations, waterfalls, and investor reporting, which fits my interest in operational finance. If you are still with us, congratulations. You are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.